Hey, Forex Fortune Hunters, Tom Wilmot, and let's follow up on our Super GMMA template that we talked about in an earlier video this week. We talked about how you could separate time frames and start with a 30-minute and then increase your profitability and reduce your risk by dropping down perhaps to a 5-minute chart. In addition to that, we showed some additional indicators that would be used on the lower time frame. I promised then that we would talk about the Canadian dollar versus the US dollar, as well as the US dollar versus the Japanese yen, and compare and see how many twists and turns we get during a weekly period. So let's take a look at that. If it's of interest, hold on to your hat. We'll get started right after this. Okay, Fortune Hunters, before we get into some entry ideas and so forth, we would just like to quickly review the template's basic indicators and so forth. We've changed from the pound and US dollar to the US Canadian, and so I wanted to show that first this morning. But before we get into entries, as I said, let's just go over the basics. Here's our 6 EMA, the green line. The 12 exponential moving average is the red line. And if we have time before the end of the video, I'm going to show you how that compares to the 12, 16, 20, and 24 bands that we used for so many years. We kind of speeded things up with this new addition. We also note here that we have our crossover indicator, the Wilmot cross, with the medallions that show this move of a 6 crossing over the 12 and a move higher. And in particular, this indicator is offered to you for free over on our Dropbox site. So if you need the indicators or this new template, please just follow the description below and the link there to shoot me an email, and be happy to get that to you as quickly as I can. Okay, now the situation is of course we had our bands here, the 45-55, and this represents a pretty strong period of movement higher. We have our zero line here on this colorful MACD histogram, and obviously this is a move higher with some pullbacks along the way, but because this is the 12-24, not the 6 and 12, it's a little slower, so you might find that you'd have a move higher on an orange bar before the white bars start up. I used the 6 and 12 MACD, and you can experiment with that, of course, but I found it to be a little choppy. This just seemed to be a little stronger indicator of where we're headed and when the pullbacks could occur. Okay, now the second part of this is that what we tried to do here is use the longer time frame when there's a steadier move, less noise, less chop, less kind of lack of conviction that sometimes you get on the shorter time frames. But the idea is very simple. Once we get an up move in the longer time frame, we could drop down to the shorter time frame and improve our entries and cut back on our risk. So this is where we went with the 5-minute chart, and you can see here we've used multiple moving averages, the 25 through the 50, and the Ichimoku cloud, and there's a further description of why we did that in the previous video. So in any event, this particular medallion, the yellow one, indicates that the cloud, the longer time frame moving averages have also flipped over. And you can see also here this particular pink one suggested a move to the downside. Now that was not very long-lived, obviously, on the 5-minute chart, and we got into some chop. This is our 7 o'clock in the morning U.S. time, East Coast opening, I call it, of the U.S. session. Here's our London open from the previous night, chop here, and so forth. And now we've moved in this particular screenshot to the 16th of September, a week or so ago, with the opening of the New York Stock Exchange here at 9:30. On this vertical line, we have this this kind of a move to the north. And in the Canadian dollar, that was pretty significant. So we can see here that we had 46 pips, which is a great day's work. Now what I'm going to do is the reverse of what we did before. Let's take a look here. We had the up move. We had the moving averages crossing through the cloud to the high end. We have stacked moving averages moving higher. We have white bands here on the MACD. Now let's take a look and move to the 30 and see when we get a confirmation. And in fact, you can see it perfectly aligns here with the upward medallion. So our idea that what you can do is simply track the 30 and perhaps use the medallion as an opportunity to alert you to a change by sending you an email or an alert to your phone, a text to your phone, which that's capable of doing in the indicator I had programmed for me. We put, in order to get to the beginning of the next candle, let's open that up for you, to begin to get to the end of first part of the next candle, where you see this crossover of the MACD and move higher on the RSI chart. What we can do there on this next move is also to cut back, move down. Now I told you before, here's a quick trick for you. Right click on the chart anywhere, go to objects list. Here's our vertical line we just drew. Color it in and then say show, and that will automatically move you to the point where it's going to be located. And notice this, real big move on the US dollar as it strengthened against the Canadian dollar. 83 pips on a 5-minute chart. And by the way, the loss risk was down in the, below the multiple moving averages was only 8 pips, and it was only 18 down below the cloud. So as a result, whenever you're doing 15 to get 80, you've had a nice risk reward ratio. Okay, now that has explained a bit of what we're doing. Once again, as you have these moves here on the 5-minute chart, notice we have a breakout. But typically what happens is you do get a pullback of some sort. Even though these bars continued white, notice that we had a sensitive move on the RSI back down to the 55 and then a reversal. And I would suggest to you, because this is where our 30-minute chart made the move higher, that we have here a situation where this is where you'd have your entry with your stop loss down in this area here. If you were to take out this low again, better to wait for a better setup and just take your lumps and then move on. But obviously this one worked out tremendously well. And we can see the power of having all of these aligned in the similar direction. It really suggests that you've got to really come back. Now notice even up in here with all of these stacked up on the upside, even though this is the pullback that you see here and we came back into the 45-55, very difficult to get below this cushion of the multiple moving averages. Okay, let's quickly change over now and go to the US JPY. We'll do a similar thing here. Here's some 30-minute charts, which means that these are daily moves from one dotted line to another. The hour-long chart obviously would have a fewer candles, but let's just take a look. Notice that we had an up move here, and you could drop down to the 5-minute and see what happens, but can you take out this high? You'd be watching carefully. And then, of course, a reversal. We had this situation here, and when we ever have this switcheroo of the medallions, that's a pretty good signal that we're going lower on the blue medallion. Notice also that the number of pips here in this move certainly overwhelmed any short-term loss you'd have had by taking this trade to the north. And you have plenty of time to get out of these trades also with your stop loss put in position correctly. Okay, so if we were to see what, let's see what our calendar says here. This is the 17th, which was Friday. This particular situation here was Friday. Then we had our move to the downside on Monday. So let's just see. We had only this move back here that took Thursday and Friday higher. Then we had some chop here as we moved into the weekend. And then we had our move lower on Monday. So you probably wouldn't be trading in the early hours of the Asian session here on a Monday. You'd kind of wait and see what developed before you get into this. And so here's our potential trade lower. Notice here we have another one, and we have actually, without even having to change to the 5-minute chart, we have a situation where this was good for 22 pips. And on the US JPY, that's actually a pretty significant move. This pair does not really usually blow the doors off in terms of average true range. Notice here we had another move to the downside, and this accurately called this particular downdraft. Then we had this, and waiting for the pullback into the bands, we had this move to the north. Here is the move that we're experiencing today, which is Wednesday, and it's Fed Day. Okay, so once again, those are the ways that we would be taking a look at this on the 30-minute chart. Let's just try one more here to see how we go with the 5-minute drop down. And once again, what we're going to do is going to go to our objects list by right-clicking anywhere on the chart. Here's our vertical line, and we want to show it. That eliminates having to search endlessly by moving the screen. Here's what's happening. We have our downward facing multiple moving averages here. We have our medallion suggesting our 6 and 12 are headed downwards. We move into this period. This is the 9 o'clock hour on Forex.com, which is 1 hour before the London Open, which is here in Aqua. This would be 3 a.m. on the East Coast Boston time, and it would be 2 o'clock in the morning. This is when I think you can begin to really expect some movement. This would be coming from the continent in Frankfurt and other financial centers there, and then followed up by the London Open. Notice here we had this nice down move. All of our indicators are now separate from one another here. We had a pullback into the bands, but a failure. Then these continue to not be able to break the 45 on the upside, even in the Japanese yen, the 5-minute chart. So this is another way you can estimate yourself. And notice in this area, even if you get in here, your risk up into this area is 5 or 6 pips. So really not a very meaningful amount of risk in order to collect on this wonderful downward move, which is 38 pips just to the open of the 7 o'clock hour. And notice again that what we've been able to do is use the 30-minute chart to give us a signal that a longer term trend is likely to be in place. Okay, so quickly for review, we have our 6 and 12 EMA, we have our crossover medallions, we have our RSI that we like to keep an eye on, as well as our MACD. Notice the triple and quadruple confirmation that we're headed in a specific direction on the 30-minute chart. Notice also that we can then draw a line. And what we've done here is to put a line at some place exactly like this, for example. Now notice we'd expect a pullback of sorts. If we're headed lower, the bulls are going to try to turn it around. And if you see a failure, that's when you can begin to get excited about the move. And let's see how that translates to the 5-minute chart, which will be drawn. Now we right-click anywhere on the chart and we go to Objects List. And you see the vertical line, and you can show it, and then you close, and let's see where we are here. There it is right here, just like magic. Now we come down into this area, and here's our 9 o'clock hour on Forex.com before the open of the London session. Here's our London session, so you can see as we're increasingly moving toward that open, you've got this downward signal, and all of your indicators have begun to separate. We had a bit of a pullback here, as we noted, and then a crush downwards. And we also have had one or two of our red bars appear. So in this whole area, because we're below the zero line, really that's an indication that the short is probably going to be next. Okay, folks, once again, always hope that helps. Please subscribe and give us a like. It really helps get the word out. Please don't hesitate, if you're new at Forex, to check out our books over on Kindle, the Zeelander Flytrap Forex trading strategy, as well as the Forex Power Search, with more than 20 templates like this one to play around with. In addition to that, if you hit the bell when you subscribe next to the subscription box on YouTube, we'll send you alerts when our next material is coming. We hope you enjoyed this, and we hope it brings you great profits. That's the purpose of it. So please feel free at any time to send a question or a comment. And until then, see you next time.